Right. So Sam Bankman-Fried, the key to his empire of fraud is that he created his own play money token called FTT, and he was able to create that without any oversight or any tie to anything underlying giving it value whatsoever. And this is a whole cryptographic scam that's been going on with the crypto market where individuals, and he's not the only one, there are many people that create these what are called altcoins or scam coins. And they create, Ether is another one, or Cardano or XRP. These are all coins that are just created, and then they list these coins on each other's exchange, and then they buy them from each other to create a price, and then they use the enhanced price, which is now has a collateral value, to go buy something like Sam Bankman-Fried did, real estate in the Bahamas. Right. So it's a Ponzi scheme.
American broadcaster and popular Bitcoin investor Max Keiser is one of the latest leading industry figures to react to the FTX collapse. In a recent interview with Fox Nation's Tucker Carlson, Keiser, the co-host of the Orange Pill podcast, discusses the steps involved in cryptocurrency scams like the FTX and Alameda research crash. According to Keiser, Sam Bankman-Fried built an empire of fraud by creating his own play money token FTT. The token, Keiser adds, has no tie to any underlying asset and has no value whatsoever. Keiser describes SBF's former multi-billion-dollar empire as a giant Ponzi scheme with some underground connections to powerful politicians and regulators in the United States. In fact, Keiser believes the American financial system is a healthy breeding room for schemes like the FTX Alameda cryptographic scams. According to the renowned Bitcoin maximalist, financial regulators have looked the other way for more than 4 decades as Wall Street committed similar heinous financial crimes. As such, Keiser adds that there will always be ignoble people like SBF who perpetuate huge scams, win over regulators and politicians, and walk away completely unscathed. We will now take you to Keiser's explosive interview with Tucker Carlson. Please watch, share, and like this video. Also, ensure you drop your comments and observations in the comments section, subscribe to the channel, and turn on post notifications for more videos. Thanks, enjoy the video.
The closest analogy I'll give you would be in 2008 during the financial crisis, the ability of Wall Street banks to create derivatives and mortgage-backed securities. So they were simply taking a plain vanilla mortgage, and then they were rehypothecating it and repackaging it and creating digital financial alchemy to make something that was worthless have a quotable value, and then using that as collateral to float more derivatives. And as Chuck Prince at Citibank said at the time, this will continue until the music stops. Well, guess what? The music stopped, and the whole house of cards collapsed, and the central bank, who was really responsible for the whole thing by making money so cheap to fund the scam, came in and made money even cheaper. So instead of there being any accountability, instead of there people going to jail, like William K. Black during the 1970s SNL crisis sent 1,000 bankers to jail. And what they did in America was, instead of making that particular type of fraud illegal, they simply changed the laws to make it so that it was never going to be prosecuted again. And it opened the door in the 1980s for all kinds of other scams, which then led to the 2008 crisis and the current crisis we have today. We have laws in the books, Tucker, but we don't have anyone enforcing those laws. And implied in the Sam Bankman-Fried crisis scam is none other than Gary Gensler over at the SEC, who should have been calling time on this a long ago, but we find out that he's actually involved and that there's some what I would call collusion. And the problem is, in America, you have a country that's ruled by a kleptocracy. Every institution in America is tied to Wall Street in some way. They've all been financialized. They all use cheap money. They're all cross-collateralizing each other's assets. They're all using that money to buy real assets, and they're all undermining the economy in fundamental ways, which lead to inflation, which lead to unemployment, which lead to all kinds of dysfunctions in the economy, in our medical system, in all across the institutions. It all goes back to essentially the deregulation that happened 40 years ago, which led to the financialization and the over-indebtedness, the over-leveraging of the economy. And now, in 2022, since interest rates are going up, that's the end of the mirage, that the bubble has been popped. And the FTX scandal and the Sam Bankman-Fried scandal was like the last dregs of a 40-year bacchanal in cheap money, no regulation, and crooked bankers. Started in the 1982 on Wall Street as a stockbroker. I worked there for 8 years. I worked at Payne Weber. I worked at Oppenheimer. I worked at Shearson Lehman Hutton. I worked at Alex Brown and Company. And so I had a front row seat during a period in financial history in America where a lot of innovation, so-called, was brought to fore because of the appearance in the 70s, late 70s, of the discount brokers. So what happened is for Wall Street to compete with the discounts like the Charles Schwab's and others, they went on a spree of inventing products. And they went and they created, for example, Mike Milken and junk bonds. That was a way to grab back some revenue from they were losing it to the discounters. So they created the leverage buyout, became huge. And in America, you had the corporate raiders who came in, Carl Icahn and others who went to Mike Milken, and they borrowed tons of money and they bought assets and then they stripped those assets. And so Wall Street was let loose in effect. And Alan Greenspan at the time at the Fed was saying, well, you know, my job is not really price stability anymore. My job is to service Wall Street. Anytime they get in trouble, I'm going to make interest rates cheaper, and I'm going to bail out Wall Street. That was the new mandate for the Fed, and they call it the Greenspan put. Well, later on in retirement, he said publicly that he regrets now, and he looks back, and he said he was wrong, that the idea of simply throwing the keys of the castle to Wall Street, letting them do whatever they wanted to do was incorrect. But at the time, remember, Alan Greenspan was doing ads for Apple Computer, and he was a media figure. Yes. And so he was very egocentrically driven to have the attention drawn to him. He was not like Paul Volcker, who preceded him, who took rates up to 16 to 17% to wipe out the inflation that was the result of the Vietnam War and all the profligate spending in the U.S. So he became a celebrity. And this was the first time really you had financiers become celebrities. Flash forward to Ben Bernanke and Hank Paulson and the financial crisis, where they're on the cover of Time magazine as saving the world. And the 2008 crisis with Timothy Geithner was atrocious chapter in American financial history, where laws were broken and rewritten on the fly, where Hank Paulson put a gun to Congress' head and said, give us $780 billion right now, or we're going to crash the market. And the next day, the markets did start to crash, and then Congress said, oh, sorry, yeah, we'll give you your money. So they hold the Congress hostage because they can manipulate prices. Bitcoin solves this because Bitcoin is not controlled by anyone. It is pure market driven. And the price of Bitcoin, the value of Bitcoin is dictated purely by people's willingness to have or need to have an unconfiscatable, uncensorable way to own property outside of what they see as a very big corrupt system. Now, you had Michael Saylor on your show who did a very great explanation about how Bitcoin beats inflation. You know, what I would add to it is that Bitcoin beats the kleptocracy. Bitcoin beats the inherent fraud and the problems in the U.S. economy as it has now descended into what would almost be argued a permanent state of dysfunction by captured regulators, venal, ineffective politicians, and a media, present company excluded, but a media that's also in their pocket as well. So we have really a crisis.
In his interview, Keiser explains that other altcoins, including Ether, Cardano, and XRP, are just like SBS Play Money token. He adds that these other crypto assets are securities backed by nothing and were created out of thin air. He also names other players he believes are complicit in the FTX collapse. They include multinational investment company BlackRock and venture capital firm Sequoia Capital.
After Bitcoin was created, a lot of people decided that they could come up with digital currencies that were going to be that could be used as scams. Essentially, it was very easy to create play money, and I did this myself, as I mentioned, in the 1990s when I did the Hollywood Stock Exchange. I created a virtual currency as part of that game. So I know this market very, very well. And so I can tell you intimately, in detail, from a technological point of view, the ins and outs of these frauds that are being perpetrated. And these tokens that are being created in the trillions, they have their purpose is solely to be picked up by this cartel, if you will, of VCs out in California. Sequoia, you mentioned, is part of it, and others who are involved in a collusion in racketeering. This is the thing about it, Tucker, is that they're involved in a clear-cut case of criminal enterprise. It's a criminal enterprise. It's a racket. They need to be going after with RICO. The Andreessen Horowitz, Sam Bankman-Fried, Sequoia, BlackRock, they're involved in a criminal enterprise and a racket by boosting the price of worthless tokens on each other's exchanges and then using that token as collateral to fund things like, oh, the war machine in Ukraine. Oh, Joe Biden's re-election campaign. Oh, the midterms, which we now know was highly influenced by money that was manufactured out of thin air. They can't get the money from Congress. They can't get the money from their donors. So they created this entity called FTX, which is a huge slush fund. Essentially, it's a slush fund disguised as a crypto exchange, which is managed by somebody. The way I see Sam Bankman-Fried, he's kind of a cross between Bernie Madoff and Charles Manson, right? Because he's got his little cadre of drug-addled sex maniacs in the Bahamas, and he's perpetrating the biggest Ponzi scheme in history. So imagine that, the mix of Charles Manson and Bernie Madoff, and you end up with this freaky, fuzzy-haired, larcenistic criminal. The Sam Bankman-Fried, as abhorrent and ridiculous as it is, he's actually just the tip of the iceberg. There is really, I always say that if you took fraud out of the American economy, there would be nothing left. It's an economy run almost entirely on fraud. And fraud is celebrated. Like the movie The Wolf of Wall Street, people don't see that as a cautionary tale and they should avoid committing fraud. It's used as a playbook by this generation, like I'm going to steal whatever I can as fast as I can. That's the morals, that's the ethos you find. This is why El Salvador has become the beacon. El Salvador is now the shining city on the hill. El Salvador is now where hope lives in the world because you have a president who recognized the potential of Bitcoin early, who recognized that everything else was garbage, and none of these scandals are hitting El Salvador right now. There's no FTX scandal. There's no Mike Novogratz. There's no Charles Hoskinson. There's no Brock Pierce in El Salvador because he pushed them all out. And now they formally created a Bitcoin office. They formally created new securities laws, which will open the way for volcano bonds. So they're going to escape the IMF by producing their own volcano bond financing mechanism, which I'm consulting on.
What's a volcano bond?
So you're tapping into geothermal energy to reward investors with a Bitcoin dividend via a bond offering, essentially is what it is. So it's a volcano-backed bond. And the proceeds are used to enhance their geothermal energy capacity because they have a lot of stranded energy. We already know it works because in Iceland, they developed a huge Bitcoin mining industry tapping into the Icelandic geothermal energy, of which they have a lot. Before, Iceland, the way that they would export that energy is that they invited aluminum smelters to come, like Alcoa, and they smelt aluminum in Iceland using the very cheap geothermal energy. Yes. Then they export that aluminum.
It takes enormous energy to smelt metal.
Right. So that's a GDP boost for Iceland. Because they can't export the energy because energy degrades as you leave the source. But if you create an aluminum ingot, you can export it. You see what I'm saying? So they turn geothermal into aluminum. Here in El Salvador, they're turning geothermal into Bitcoin, the hardest money known to man in history, that gives financial freedom to all Salvadorans and anyone around the world, and unconfiscatable, immutable, uncensorable money. And President Bukele recognized that early. He's been tweeting about it since 2017, and he's got a full Bitcoin plate, a full agenda, which is in motion right now. So this is really happening. So El Salvador is really becoming a beacon of hope.
What are your thoughts on Max Keiser's assessment of the FTX collapse? Please drop your comments and observations in the comments section below. Also, sure you like this video, subscribe to the channel, and check out our other crypto-related videos. Everything you do helps with the YouTube algorithm and contributes to the channel's growth. Thanks for watching.